の虜になってしまえばきっとこの夏は充実するのモード噂の Dreaming が忘れないででも気持ちは伝えてしまえばいつかこの夢は覚めてしまう
Welcome to FIN546 News. Today's headline: to discuss the value proposition, financial structure and operational mechanism, financial system and instrument offered by Hiwalah, Wakalah and conventional system.
Hiwalah is an agreement of transferring a debt from a responsibility of a person to another. There are two value propositions of Hiwalah, which are creditor and debtor. For creditor, it can authenticate the loan repayment. It ensured that the creditor could retrieve his or her money back by demanding payment from the transferor, which is muhal alai. In case of default payment, it could be retrieved from the first debtor, which is transferee. Next is debtor. It can minimize and spread his or her risk because the debtor can remit or pass over his spread to his own debtor. It could also convince the creditor to lend the debtor money since he or she has somebody to back him up as the transferor of the payment. This is the diagram of structure and operational mechanism of Hiwalah. The previous figure shows transaction flow of Hiwalah-based financing works between the three parties involved, and the explanation as follows. SME supply particular goods to the partner. After checking quality and quantity of the ordered goods, the partner issues term payment check that can be cashed within a particular period. The SME passes the current account to the cooperative. SME will then check the originality and validity of the financial instrument issued. The cooperative issued check that can be dispersed and used by the SMEs as working capital. In return, it receives ujrah from the service provided based on the agreements with the SME. The instruments of Hiwalah are bill of exchange, suftaja, transfer of money or remittance, al-saf, banker's checks, and demand draft. Hiwalah in conventional banks. Conventional banks does not accept transfer of debt as it only offers lending facilities to their clients to fulfill their cash requirement on the basis of loans contract, where the relationships between the banks and clients is that of lenders and borrower respectively.
The first scene that happened in Istanbul, Turkey is one of the example how Hiwalah works.
Natalie, what are you doing here, Natalie? Shasha! I need to buy some groceries. How about you?
Same. By the way, how are you?
Not so good.
Why, Natalie? Is there anything that I can help you?
I have a problem. I'm running out of money, A few days ago, my washing machine was broken. And I'm so busy, so I have lots of clothes I need to wash.
OMG, really?
Yes, Sha. If you don't mind, can I borrow you 1,000 ringgit? I want to buy a new washing machine.
Yeah, sure, why not? I can give right now, wait. Here, this is 1,000. You borrow from me first.
Thank you, Sha. I will pay you later.
Hey, no problem. Small matter.
Oh, I just remembered that Ashikin owes me 1,000 ringgit too. So if you don't mind, can you negotiate with her to collect the 1,000 ringgit debt?
Yeah, sure. That would be easier because me and Ashikin also live in the same neighborhood. So later I'll collect the 1,000 ringgit from Ashikin, okay?
Thank you, so much, I can't imagine if you can lend me 1,000 ringgit and I have to wash all of those clothes manually.
Now, let's moving on to Wakalah.
Wakalah is an agency contract where one party appoints another to conduct a defined legal action on his behalf for a specified fee or commission. The value proposition of Wakalah are low overhead cost. With the use of Wakalah, the company is also able to reduce its mandatory and fixed costs. They do not have to open branches in every district. It may be sufficient to one of the branch in each state. Banks can open their own agencies if they want to get higher returns. Next, to ensure better service. With the use of agents, they will be able to provide information as well as advisory services on the importance of obtaining takaful coverage as well as managing the journey and process of obtaining such coverage. This is the structure and operational mechanism of Wakalah. There are 4 conditions pertaining to the basis of Wakalah contract. The first one is the muwakil shall authorize a specific wakil and notify him of his appointment. Next, the wakil, which is bank, an agent wakil to perform a particular task in matters that may be delegated either voluntary or with imposition of a fee. Subject matter in Wakalah contract should be known to agent, and it is not permissible to delegate someone to perform unknown thing. Offer and acceptance may be expressed verbally or by appropriate documentation or by any other methods accepted by customary business practice which does not contravene the Sharia principle. The instruments of Wakalah are Agency for Investment, Wakalah bil-Istimar, Sukuk, Bonds, Letter of Credit, Takaful, Insurance, Islamic Monetary Certificate, and Term Deposits. Wakalah in conventional banks. It is known as agency, the relationship between a principal and that person's agent.
The second scene, which also happens in Istanbul, Turkey, shows how Wakalah works.
So now I have a stable income. I think I need an insurance. Eh? Takaful insurance? Hello?
Hi, I'm Natalie, the Takaful agent that you have called last night. Please have a seat, miss.
Hi Natalie, so I'm Shasha. I'm the one that called you last time. You are Takaful insurance agent from Bank X, right? So I think I need a Takaful insurance, but I don't know where should I start, what should I do. So can you please enlighten me and can you please explain more about Takaful insurance to me?
Sure, miss, no problem.
So, Natalie, as a Takaful insurance agent, explains everything to Miss Rosilia about Takaful.
Okay, so now you just need to sign this contract and here's the pen.
Done. So thank you so much Natalie, you're a very nice person. You explained to me one by one, and you are the most soft-spoken insurance agent that I've ever met. Thank you so much Natalie, it's so nice dealing with you.
That's all for today's news. Thank you and Assalamualaikum.